Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Mullen is a very exciting and interesting stock to cover because of its high volatility providing opportunities and the ongoing projects that may fuel the speculations even further. At the same time, it's a company that has a hard time proving to the market that its relevance is for the long term and not just the short term speculation. In this video, we will go through the latest fundamentals, the price actions, and my analysis, as well as my recommendation to hopefully help you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description, as every help is greatly appreciated. Over the past few days, Mullen stock has been fairly strong in the stock market, and by fairly strong, I mean they have maintained the overall level around 35 cents. Remember, initially they went up to like 50 cents, they went down to 20, and now they're hovering around like 30 cents, 35 cents, and so on. Well, I believe that the region between 20 and 35 cents, this is going to be a fairly strong support level for Mullen. And does this mean that they're going to take off from there? Actually, this time, I think it will. I think that very few possibilities are available to push the stock even lower than 20 cents. I mean, unless the stock has been revealed as a complete joke, a complete scam, I don't think that this is ever going to occur. But with that being said, if we look at a company from a holistic approach, is it really a good stock to put your money into for the long term? At the moment, not really. And the reason why is because this company seems to be a little bit like a hustler. So as I look at, like, for example, as I was doing the research for Mullen, the related stocks on the side were Faraday Future and Ideanomics. I mean, I can go on and on about Ideanomics because this is a company that I have covered before, and people have given me flack because I was way too skeptical about, how legit the company was. But Faraday Future, I just want to, briefly mention it, okay? For people who don't know, Faraday Future, so FFIE, is a company that went public in like the craze of the EV back in 2020 and 2021. And maybe they came a little bit late to the party, but regardless, the fact that this company can even go public kind of says a lot about the stock market. Remember a few months or a few weeks ago, we were talking about how screwy sometimes the stock market can be, given that FINRA can just stop MMTLP trading. Well, FFIE is created by a man who is wanted for false pretenses in the stock market and defrauding the shareholders in China. And somehow this guy has been able to create a company out of the thin air and to make it to the stock market. The fact that, of course, it has plunged and everything, but it's like the existence of this company is kind of a testament of how of what kind of stuff can float around in this messy ocean called the financial markets. So back to Mullen. Mullen is a company that is around actually for a fairly long period of time. I'm counting in all the previous avatars of Mullen, of course. So Coda Automotive, Mullen Supercars, whatever it was called. Yes, they've been around for a long time. Have they actually delivered on anything? Well, right now they're delivering iGo little cube cars that's going to be distributed in Europe. But have they actually delivered anything of their own? And even if they do, how much of this is proprietary technology and how much of this is going to just be Lego work? You buy something, you buy the batteries from one party, you buy the engine from another, you buy the car body from another supplier, and then you just combine them together. That somehow becomes your product. Like, this is where we're at with Mullen. Of course, they pretend the opposite. They say that they have a battery technology that's going to be like so awesome. So far, I have to say that so far, people have reacted to those news positively in the market, but I cannot pretend that these have to be the truth. Okay, I think that some of it was speculation, and back in the days, I had a sizable position in Mullen, and the profit was like above 100%, and then I've liquidated it. That's something that's, fortunately I did, because otherwise the stock would have gone down by another 60 to 70%. So yeah, back then it was like around the $1 level or the $2 level when this opportunity presented itself. So overall, I would say that now is a good opportunity to buy Mullen if your intention is to trade the swings, not like to stick around to see if one day Mitsui is gonna actually give you like EV cars, or to give you like dividends from the sales of those EV cars. I wouldn't rely too much on that scenario to benefit from the whole situation. The potentials are in the short squeeze and the volatilities. It's also in the unreasonable or the non-quantitative based catalysts that may suddenly burst out, because this is a relatively small cap company, so things can move in and out very quick. So this is what I'm relying. Mullen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, XPeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing iGos in Europe. So this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control that will determine if the short squeeze is something that will occur. So just to quickly conclude, what is my opinion on Mullen? Well, it's pretty clear. Obviously, like I've said, I think that Mullen is a stock that you can profit from if you trade the swings, if you're smart about the entry point, and a good entry point is now. Okay, now seems to be a decent point to start building up the position all the way, I would say, up to maybe 40 cents, 45 cents. And then you see whether it can reach $1. When it reaches $1, I would highly recommend people to start offloading part of the position and then wait to see whether the bulls want to move ahead still. If they don't, fine. We already cashed in our profits. And for people who want to invest in Mullen long term, I would say that if you want to do so, do it with the profits you've made with those swing trades. Don't go in with your own money. Don't go in knowing that Mullen is a company with a inconsistent reputation over time. And also the maximum exposure should be within 1% of your portfolio's capital.